All right, well, good afternoon, investors. Welcome to our mid-July 2024 edition of Bull Sessions. My name is Mark Robertson. I'm founder and managing partner of Manifest Investing and a volunteer with the Mid-Michigan chapter of Better Investing. This is a Manifest program, but we do a number of programs with the local volunteers for Better Investing, led by the magical mathematician up to my north, Ken Kavula. Good afternoon, Ken.
Good afternoon, Mark. It's kind of getting dark up here again. I wonder if we have more storms coming through right now. So it's I can see through to my backyard, and it's looking like twilight back there right now. So
yeah,
we must have something passing through.
And you know, power's been out in so many areas of the country, and if we do happen to disappear, we'll just come back and do this some other time. But it is the storms are just coming in waves here. It's just an amazing meteorological time to live in right now. So good stuff. And then we're also joined by Kim Butcher, who is battling the heat, and she's bribing the air conditioner installation crew down in Florida. Good afternoon, Kim.
This is the air conditioning crew in Indiana.
Oh, okay. Well, it seems to me like you're working on equipment in both locations.
Unfortunately so. Cha-ching, cha-ching.
Oh, not good. Not good. All right, so let's go ahead and get underway. We are going to do what I think is going to be some fun. Ken was reminding me that we have done some versions of this in the past, but we are going to go back and take a look at this is a real potential for a dose of humility, Ken. Anytime you go back and say, well, what did we say 8 years ago? And then what did actually happen? But this is going to be a little bit of a fun trip back to what was going on in 2016, about 8 years ago at this time. So we'll go back and take a look at that and answer a couple questions that were left unanswered last week. Anything else you'd like to add before we jump on the time machine, Ken?
Oh, things are going well here, Mark. So let's keep it going, okay?
All right. Let me see if I have control of my computer. I do. All right, this is your weekly reminder that Portillo's is not a sponsor of this session, although they should be, and consistent with the time machine, I just thought I'd go back and share once again how it all began at Portillo's in what is now 60 years ago, and then their first drive-through 20 years later. And just a quick reminder that get out there and buy some hot dogs, people. My stock price needs some support. All right, here's our boilerplate notification. No investment recommendation whatsoever is intended. This is an educational demonstration. What we're doing here for the next hour or so is sharing the philosophies, methods, techniques, the way that we discover stocks and analyze them and talk about portfolios as promulgated by the modern investment club movement. So you're going to hear our opinions, our interpretations, but we literally have 8 decades of successful investing that we can witness, attempt to understand, and share. So please do your own homework about any company that comes up before you dial up your broker like we used to in the old days. Do your homework and make your own decision. If we talk about a stock that we own, we will try to remember to disclose that. Yes, I do own actual shares of Portillo's, and yes, Kevin, I still do own Western Alliance. But form your own opinions and make your own decisions. Our 2 email addresses are there at the bottom of the page if you have any follow-up questions or if you'd like copies of the slides. Anything else, Ken?
Nope. Let's keep on moving.
All right. Once again, we'll start with the groundhog, and I'm going to just shut up and let Ken take his victory lap here.
That's the highest I've been in a number of years, Mark. So I'm going to celebrate number 7 right now.
Savor it. Savor it.
If I can just stay above 15%, I'm going to be happy. And this whole list is above 15% total return. So that's really good. We also have a new record for number of clubs in the top 40. I think if you go down and count the clubs that are in bold type on this list, you come up with a new high for the contest this year. I counted before 13 of them. I better count again, though, to make sure I'm right.
I double checked you. Yeah, it is 13.
Yep, there's 13 of them, all right. So that's a new plus there. And we keep adding a couple. I noticed 2 rock stars from Davenport and Simpson, Texas, has now broken the top 40.
Yep.
And it looks like the Mutual Club of Cheney out in Spokane has also broken into the top 40. So we have a number that are doing quite well up near the top, and we have some movers down near the bottom as well. This movement in the Russell 2000 has really been dramatic for the portfolios that my clubs have put together. We have very traditional portfolios with about half or more in mid-cap stocks and about a quarter or more in small stocks, and really very few of the extremely large mega stocks are in these portfolios. We've watched these club portfolios in the last 10 days now move up. In one case, they've moved up 14% in 12 days based on the fact that they're holding small and mid cap, and these indexes are just on fire. Today, for example, the Russell 2000, the last time I looked, was up over 2.5%. So it's really a little bit of rotation going on. If you're holding some of the large mega stocks, you're not participating in the rally. Get used to it, folks. That's what some of us have been doing for the last 3 or 4 years.
Well,
so, but the rotation is real. It really is happening.
yeah, and it's probably our cue to start getting ready for Halloween. We don't have a specific update, but I'll just whisper the number to everybody. We are now up 58% in the best small companies portfolio. Ken doesn't let me display it anymore as often, so you just have to run with that. But it is fascinating. We are back to about 40% of our groundhog participants beating the market. And what I continue to find fascinating is that value line arithmetic average has now sagged down to 132nd out of our 180 entries, and it's really kind of stuck in the mud. Maybe it picks up some momentum with what Ken was just talking about.
I think also, Mark, that the value line average probably is a lagging indicator because of the fact that they only update 1/13 every week. So it takes a whole quarter for it to rotate around to the current time, and by the time you do that, some of the stuff is pretty old again, and so it's going to catch these dramatic movements, but it's going to take some time to catch them, I think, in the actual data for the value line provides.
Could be. I mean, they well, we'll just see. I think with that, there's no way that number can stay down as low as it is compared to the Wilshire, as it has been. Kathy Wood continues to be in a gut-wrenching slump. I am a Kathy Wood fan, so don't take any of this as disrespect or the wrong way. Actually a shareholder in that particular fund, ARKK. And
why don't we show the next slide since we're talking about Kathy Wood?
so you could celebrate my pain.
Well, it's not pain. It's a very. I'll tell you, if I owned this particular mutual fund, I would be celebrating right now a note like this one, because I have owned too many mutual funds in the past where it's been a losing year, and on top of that, I've been socked with huge capital gains, and on top of that, they didn't bother to warn me about it until maybe the end of November or even December, before it was going to happen.
It's been a long time since I experienced that, but it's not pleasant. Hey, the monkey is red hot, so we'll just ignore him. He's
okay.
he's actually the hottest groundhog out there, so he's sticking his tongue out in your direction, Ken.
Probably, but he's still 47th, so that's still beneath the top 40. Okay.
And here's a slide that I think Matt shared this from Alaska. Kathy Wood basically. By the way, this post, or it was a tweet, disappeared like 15 minutes later, but by the time it disappeared, it had 56,000 views. So.
Well, then all she has to really make sure, though, is she gets lots of capital gains.
That's right. And that's what she's obviously hoping for, and so do we as shareholders. All right. Here's a look at the markets, and this is where the lag that Ken was talking about really kicks in, because I believe that the the value line forecast denominated by that kind of gold up and down ziggy-zaggy forecast timeline is actually up in the almost 11% area, 10.7, whereas the average stock, according to us, is down around 9% for the return forecast. And I don't expect that difference to stay there. And that green bar probably is going to take a little nudge up also, Ken, over the next few weeks or days.
I would hope, yeah, I would hope so. I like to see it keeping up near that blue line, which indicates growth at about 10%, give or take a little bit. So I don't obsess about this on a week-to-week basis, but it's an extremely interesting, useful kind of idea to think about over long periods of time, and even over periods of time as short as maybe 18 months or 2 years.
Absolutely.
So, yeah.
Okay, and this is a cleanup from a question that went unanswered last week. So Ken, yes, you're right. And that's where the VF comes from. And this is, I apologize to our audience and everybody who pays attention to these, because this does kind of threaten our PG-13 rating a little bit. But Ken is willing to walk on the wild side, apparently.
I love the corset there, Mark. Okay.
Oh,
I'm
man.
I'm old enough to remember people wearing those things. So,
Well, I'll tell you, last night I watched video from a wedding reception, and oh my, enough on that. But yeah, this VF company is kind of fascinating. I find it intriguing, and so does Susan Jabinski over there at Morningstar. They've got some good brands, and their stock price is literally in the toilet. And their fair value that you can see on that chart to the right, the lower right, it's a mystery, gang. That's it's one of the larger differences between the fair value, and which is up here, and the actual current stock prices, which are down here. And you can see that those are that gap is as wide as it's historically been. There's a few companies in the same realm, same industry, that kind of look like this, and I can't explain it. Unless somebody has declared that we're no longer going to wear undergarments. I don't know.
well, Mark, this is purely an anecdotal story, but I live about 10 miles away from a very, very large outlet mall. And there are North Face stores in the outlet mall. And on any given Friday, Saturday, or Sunday, you have to stand in line outside the North Face store just to get into the North Face store. So they're doing something correct at the outlet end of North Face. That's just one of the brands that Vanity Fair deals with. I'll give a research project to somebody out there in our audience. Does Vanity Fair, VF, also deal with the brands Van Heusen and or Lee and or Wrangler? It's a question that I don't have time to investigate right here when I'm doing everything else in the middle of the bull session, but it would be interesting to find out if any of those brands are under this umbrella as well. Van Heusen, Lee, or Wrangler?
Yep, I would bet on Wrangler, and I'm not Van Heusen, but we'll see later. All right, and here's the other one that Ken was longing for last week, because we do like to point out, this time series depiction or graphic of profitability over time, and this is for all of the value line industrials rolled up into a median, and it's just simply to make the point, net margin is basically directly related to earnings per share. So I changed the color to blue to help us a little bit, Ken. And then I put in the pre-tax income as you requested, just to show that the only thing between that pink magenta line and the blue line is the tax rate, the effective tax rate. And it's shifted.
The reason I asked this question last week was I've been very interested in the preferred procedure for the last 8 or 10 weeks because I've been preparing some educational materials on it. And as I went through and did a large number of preferred procedures on many different kinds of stocks, small, medium, large, different industries, everything else, I was getting the feeling that we hit a low in total taxes about 2 years ago, and that for a lot of companies, taxes were actually creeping back up again. The effective taxes that they were actually paying, in which you would use in the preferred procedure to help you come up with an earnings number. And in fact, this graph just bears out my gut feeling that the taxes have been increasing since maybe 2022, maybe 2021, since the pandemic. And the lines look like they're diverging a little bit. And remember that the federal income tax, which gets a lot of the press, and that number of whatever it happens to be at the moment gets a lot of press coverage, makes up only a part of the taxes that companies pay. There are loopholes which can reduce that effect, that federal rate, but there are also many other taxes that corporations pay, most importantly to the state where they do a lot of business, and maybe to other states as well. And those all contribute to the total taxes that are being paid by the company. So they're on the increase again.
So I'll probably clean that one up as soon as I can get a better source. I was stunned at how difficult it was to find information on that. Then this one came up, I think in the session afterwards, or perhaps in the green room before. This is a current situation which gets a little bit of airtime, so we just thought we would make a quick comment. It's famous / infamous. There's a current bill to curtail or control in a different way what our congressional representatives are able to do when it comes to investing directly in stocks. And the lady on the right is infamous for some of her achievements. Kim and I were talking about this before we came on. There's actually 10 or 20 other representatives that actually have a better track record, because there's an exchange traded fund out there, this NANC. There's actually a few of them, but this is one of the more prominent ones. Keeps track of the trading that is done based on the information in these committees. And there's a number of senators, and we'll take our hat off to these guys. I don't agree with Gary Peters very often, my local senator, but I agree on this one that it's just not fair. They're basically trading on insider information. So Ken, do you think they should be allowed to do that?
What a loaded question.
I'll put
no,
you
I
in
don't
the
believe.
spot.
I don't believe they should be allowed to do that. And we've known famous people that have gone to jail for doing that.
Like
maybe
this one.
doing it in a like this one, maybe in a slightly less brazen way. You know, she has claimed the entire time that she didn't know what she was doing was violating the rules. I don't think Martha is that stupid, but she went to jail for doing exactly what our Congress people are doing on a fairly regular basis. I really am a firm believer in blind trusts, not only for the people in the government, especially the people running different agencies at the top of the executive branch, in the Supreme Court, at the top of the legislative branch. But I also am a believer that we have to cast a fairly wide net around those people, including wives and children and grandchildren and aunts and uncles and cousins and everything else, because you have to find a way to not allow this insider information to move out. It will, and it does affect markets. And if it doesn't affect the market in a particular stock, it unduly enriches somebody trading on information that everybody else doesn't have. I think it's an important issue, and I think it's something that these four senators, mine from Michigan and from Missouri, Georgia, and Oregon, these four senators are absolutely correct in pursuing. And I can understand why people in the government would want to drag their feet on doing anything like this that makes any real difference in the way that they can enrich themselves by serving the people.
Yeah, I mean, there's a story documenting that one of the people on the committee that was briefed on COVID went out and sold his entire portfolio like the next day and probably prevented a six-figure loss based on what he had heard in that COVID briefing before any of the rest of us even heard about it.
There were
And
two of them who did that.
two of them that did that.
Yep.
That's,
Or maybe even more, but there were two that I remember at that time.
yeah, the voice that you're hearing is Kevin Gologly. Good afternoon, sir.
I know. I missed hearing your voices, so I had to come on in. It's sort of like a Tim Burton movie, Beetlejuice, where if you hear your name said 3 times, you have to show up.
Well, we didn't mention your name at all, Kevin. So
I heard someone say it. I know I heard someone say it.
I declared that I still have my Western Alliance shares. So I will tell you
there's your Beetlejuice, Ken. There's your Beetlejuice.
I will tell you that my position. Go ahead, Kim.
I was gonna say, Ken, I looked up what brands are underneath VF, and it came up with Kipling, Eastpak, JanSport, Smartwool, the North Face, Icebreaker, Napa Pottery, Vans, which are shoes, Ultra, Timberland, Dickies, Supreme, 7 for All Mankind, Eagle Creek, Nautica, and Liebelt.
Nautica. Well, that's
interesting. Nautica's not on this list. Yeah. Okay. So it does not include the what's in the present, what's in the former Vans outlet. Yeah. It does not include them anymore. Okay. Good.
Interesting. So anyhow, we'll close this topic. I'm a little bit more moderate than Ken on it. I think if they're going to do something, then what they should do is at least the rules that those of us that have worked in industry-related positions have to do. And for example, when I was on the Better Investing staff, we had to very carefully disclose any transactions. We had a reporting period and a quiet period, and we would have had to disclose any family members who bought stocks. So it was very strictly monitored through a compliance requirement. And if you violated it, you would have been fired, and the organization would have been fined. So I think they should at least have to live under those type of situations, and I don't believe that they currently are. So whatever it is, that's the minimum where I would draw the line. So I'm also a fan of the blind trusts, and why these people can't find suitable index funds during their period of service is beyond me also.
I want to thank John Barr out in our audience. John found that Lee and Wrangler were owned by VF Corp all the way up to 2019 when they were spun off, and now they're owned by a company called Contour Brands. So whether or not it's publicly traded, I don't know, but they were part of VF Corp until 2019, and now they're owned by a different company. So thank you, John, for that nugget. We appreciate it.
When you've been doing this as long as Ken has, you have those instincts and a powerful memory too. All right, well, it's good that Kevin's here for the political, semi-political, mildly political part of this discussion today. What you're looking at here is the performance of stocks after the 2016 presidential election, day after, and how these companies and indices performed over the next 4 years. So pretty good performance from those companies up at the top. The 10 companies that are named here are the top 10 companies and our most widely followed companies, the 40 that we list all the time. And interesting that CVS was still struggling back in that time frame. So they've been struggling for a while. So that's the actual incremental stuff. Here's a look that Len Douglas inspired. A look at how those companies did over that time frame. Here's that 14.2. The last 3.5 years under the current administration are actually a few points better, at least as of right now. Here's that run up that Ken was just talking about, by the way. You can see that going from here to here down on some of these lower, smaller company indices. Been kind of taken off on the right-hand side of that chart in a big way. Okay, any comments on that, Ken, or are you okay with that?
No, I'm okay with that. And here's another one that we
Semi-political
could
slide?
comment on. Yeah,
Yeah,
semi-political.
and this is just reinforcement of that notion that, the popular vote, Kevin and I talk about this stuff quite often. That popular vote number can kind of swing around a little bit. It doesn't really matter. In fact, one of the candidates could be ahead by as many as 6 points and still lose the electoral college vote. And this is the latest as of yesterday, when if you add up Nate Silver's projections and prognostications. So that's just to kind of do some house cleaning. And again, the premise for this discussion is going to be, because we had talked about this a little bit last week, the Wall Street is already beginning to lean towards a GOP victory in the election. And should that happen, it does shift the way that they invest a little bit. And Ken keeps sending me these nuclear articles, so we're going to look at another one of those here in a second. But again, they're basically anticipating changes in tax policy, changes in trade policy, and other aspects that have impacts on some of the companies. And people seem to think that they can actually trade that situation and profit from it. Maybe the NANC ETF will take care of that. I don't know. But again, we are seeing more nuclear news and leaning that way. So they're starting to react to that and the projected election results. So Ken, this is one
Well,
that's coming at us.
before you get off that slide, Mark, I think that we should draw attention to that last sentence on the paragraphs that are on the left of the screen right now, which indicates that the power demands coming from data centers are looking to be somewhere around 9% of U.S. total power supply. That's not talking about electric vehicles or any other kind of electrification. That's talking purely about these data centers that are appearing in states all over the country, especially heavy duty in the Virginia area. And we're going to get to Virginia in just a moment here. But think about that. 9% of the total power is going to be used in data centers, and the projection is by 2030. That's
tomorrow.
That's real close, yeah.
Yeah, and in fact, Laura Scott and our friends down in Florida had sent us a list of companies that are attempting to respond to that. So we're going to take a look at that. This will come up in a few minutes. Take a look at that list and some of the stuff that Ken would like to take a look at also. And that all just kind of follows along with, as this stuff continues to progress, there are certain areas that probably do demand a little bit more attention. We are not traditionally enthusiastic about investing in utilities, but that utility demonstration portfolio that we've got has actually done pretty well. And then here's a technological advancement that I've had great faith in for quite some time, and Ken sends me this one just a couple of days ago.
Well, the article on the left talks about the governor of Virginia beginning to propose and meet with Dominion Power about these SMRs, these small modular reactors. When you see the letters SMR in anything that's writing, that's what the acronym stands for. And what's interesting about these small modular reactors is that best case scenario is that they can be retrofitted into old power stations that were originally powered with coal, and they can be retrofitted in a relatively short amount of time compared to the time that it takes to build a completely new power plant, or especially compared to the time it takes to build a traditional nuclear power plant. You could drop as many of these SMRs into an old coal power plant and create as much energy as that plant used to create, or even more in some cases. There's all kinds of material written from all different perspectives that you can find on the web. And right now what I'm doing is trying to put together a list of publicly traded companies that might benefit from some of this work, or that are right in the middle of some of this work. Some of you in the audience might find it intriguing that Bill Gates is sponsoring a demonstration project out in Wyoming using these SMRs to generate power. You might look at where some of his seems unlimitless funds are going, because he firmly believes that this is something that can be done to very quickly change the carbon footprint of what we do in the world, but especially in the United States.
Yeah, I find it interesting that the Seattle skyline is pictured right up there on an article that's about Virginia.
Ken, can I ask one question about the Bill Gates stuff? Is that done through his investment arm, Cascade Investments?
Kevin, I didn't prepare myself to answer questions, but I would suggest that you can get as much material as you want on that Bill Gates thing by just doing a search on that. There is more than I could ever read on that particular idea of his, and it looks to me like he has not only put money into this project, but he's also put some real heavy-duty publicity people behind it to get the word out about what he's doing and why he's doing it. So I would suggest that you go on and do a couple searches and read a couple of the articles. I know that he's investing it with almost entirely his own funding. Now, whether that's being funneled through a trust or funneled through a foundation or something else, I don't know the answer to that.
Yeah, I know that Cascade is investing either directly in the SMRs and or the fusion demonstrations also. He's involved in all of those areas. And the other one that comes up a fair amount, I used to work on the fossil side, not the nuclear side of power generation, but the nuclear generation side was left with these stockpiles of nuclear waste that some of these small modular reactors are actually attempting to demonstrate the usage of the, literally it's a waste pile, and basically getting rid of that, which is nasty stuff, and basically use that as fuel and remediate it. So there's some good stuff going on, and I know that Bill Gates, along with others, is involved in all of those different dimensions. So it's a fascinating thing to watch. So again, I'll see if we can unearth some of these companies and kick them around here over the next week or two.
We have Joe out in the audience indicating that Gates is backing an SMR that's a very safe design. I have read some articles about the safety of these things, and there are a lot of different proposals, obviously, right now for how these are going to be manufactured and what they'll look like. And I think that the first step, obviously, will be to shake up the industry and try to settle on a couple of standards so that they can turn these out in large numbers and begin to use them. It'll take some public relations to get people to understand that nuclear does not necessarily spell disaster, and to look at the statistics behind nuclear power and how much harm has actually been done with nuclear power. We think nuclear, we automatically think big bombs. but we forget that a lot of parts of the world are very dependent right now on nuclear power for their power generation. Europe being one of the bigger examples of that going on. The country of France especially being a huge example of dependency on nuclear power, and it's being done without a lot of fanfare and without a lot of criticism and without a lot of problems.
Absolutely. Yeah, and the other thing, I did want to dispel any rumor. There is no truth to the rumor, or little truth to the rumor, that Ann Manning is installing one of these in her backyard to provide power to her house. So, all right. So in keeping with the theme, we thought we would just have a little bit of playful fun here. This is an example. This is just one of dozens of types of articles. You could just change the publication. A lot of people are doing this right now. This happens to come from Seeking Alpha. The link is down here on the lower left. Pretty sure you can access that for free, at least briefly. But they're basically going in, trying to look at some of the tailwinds that are potentially possible, and making some investments. So these were the 5 that this particular team within Seeking Alpha came up with, and we just thought we would take a look at basically trying to do our own lifting of our fingers to the wind and figure out where some opportunities may seem apparent. And this is a subject that Ken and I have wrestled with for years. So let's go ahead and do a little bit more wrestling here, Ken. Here's a look back at the performance of companies after the 2016 election over the next 1 year. And as you kind of scrolled on that list, what I was looking for here was there any industry group which just jumps off the page? I'm not seeing it. Unless you see something that I don't see, Ken, and we both have stared at these lists. I do see a large number of companies on this list that have been part of our experience. And Ken or Kevin, here's another moment for you. Beetlejuice moment. A2 Milk is on this list before I wrecked it. But there's a number of companies on here that have been on our radar screens and successfully held. So this is how they did 1 year
Mark,
after that election.
Successfully held in, like, held for more than a week?
Yeah.
Well, I'll pick out one that I still own today, and that's Universal Display.
Yeah.
It was an extremely important company back during this time period. It was doing a lot of it was the elephant in the room as far as screens were concerned, LED and OLED screens. And Universal Display is still an extremely interesting stock study. It now has competition. It's not growing nearly as fast as it was growing back in this time period, but it's still an extremely interesting stock to take a look at. And it still is the supplier of screens to many of the smartphone companies in the world, and many of the television producers in the world. So I don't think it has lost. It's lost some of its allure. It's not the darling anymore that it used to be. The other one that I'm surprised to see on this list is Semler Scientific.
Yep.
I didn't realize that we were looking at it back in this time frame.
Or should have been.
It's the one that deals with PAD, peripheral artery disease. We've heard conflicting reports now about whether their test actually helps patients and lowers medical costs or not. But Semler was denied coverage by some of the big insurance carriers, including Medicare. And what's happening now is they decided to put a large hoard of cash that they were sitting on. They put it into Bitcoin, and it's suddenly become a huge Bitcoin play. The stock took a really big, and I'm talking 25, 30, 35% jump when it made that announcement. And it's still investing in Bitcoin right now. So My club that owned Semler is moving out of it as quickly as we possibly can. We're trying to avoid short-term capital gains on the stock, but it's a company that is no longer doing what we bought it to do, and that is to be a medical device company. And I'm certain that at some point it's going to be recognized that it's become something other than a medical device company. It still has the medical device, but it's having a real difficult time. John is pointing out NVIDIA on this list.
Yeah.
And he's pointing it out at $5.17. I will tell you that this is the time frame that my family club bought NVIDIA in. We have a price basis right now in NVIDIA of under $4 a share in the family club. So when you're buying it back in this 2016, 2017 timeframe, you have phenomenal growth in the company, but as you can see, not as phenomenal as you might expect from some of these other companies that didn't have the staying power that NVIDIA did.
Yep. Well, here's Jim Gallagher's mama too. And again, this is not a commercial for performance chasing. We're basically just saying, well, how did the companies do? And if you're in a time machine, what industries or areas of potential interest? The only ones that I get a little bit of a kick from are some of the semiconductor listings on here and biotech. And those two groups have done fairly well, maybe some medical devices. So one of the things we did, well, here's a look at a company I've never heard of. I don't know anything about them, but Freedom Holding has had quite a heck of a run from election day 2016 up until the current. So just thought I'd take a quick look. Here's that same list boiled down into companies.
Did you read that whole description, Mark? It's domiciled in Kazakhstan. Okay?
I did read it. Yeah.
All right.
Interesting. Shaking one's head. And here's just the ones from the Value Line Standard Edition, and just to kind of boil the list down into names that we kick around. Again, the intent is to try to see key sectors, industries, or areas of interest, and nothing's jumping out at me.
Well, the one that jumps at me, Mark, only because of its recent performance, is Celsius Holdings.
Mm-hmm. Yeah.
It's giving Monster a real run for its money right now. It really is.
So let's go ahead and take a look. Here's
I was going to say, one of the points I'd make with this is that I'm struck by the line of sort of like Peter Lynch, where he said, be careful of stuff that grows by 200 to 800% per year because it can't sustain. And if you look at your original list, those ones way up at the top, they're ones that were sort of like almost Roman candles. But those that from basically Universal Display downward, there are many of them that are really kind of core holdings. I mean, that's where NVIDIA is. That's where Catalyst is. There's a whole range of stuff. Align Technology. Those are ones, if you look through that, those are a lot of the same ones that we consistently look at. So, it's not that you poo-poo this list. It's just that you don't want to chase the biggest ones. Just look for the ones that seem to be doing really, really well over that period.
Yeah. No, the other thing that kind of nudges me. In fact, let me go to the next slide. Here's that same list over 3 years, but let's. It's basically just saying that some of these companies stayed up near that for the next subsequent 2 years. I'm sorry. Let me go and point out that we're now talking about 3 years after election day, and some of those are still up there. I think we as investors have a really tough time with something that has gone up 100 or 200%. I think that's kind of what Kevin's getting at. Again, we don't advocate performance chasing, but at the same time, some of these companies have a lot of running left to do. And it's kind of fascinating to see them linger so high on a list like this for an extended period. A2's on this list also, Kevin.
I see that. So who knows? Maybe it is the one to get.
It could be making a big comeback. Here's the boiled down version of that list, just to the value line standard edition stocks, along with some current statistics on them. So some of these on this list, I guarantee you that. Oh, I can't do a guarantee. I can almost guarantee you that some of the companies on this list still have room to run as companies.
Well, I notice AMD on the list, Mark, and we know that back in this time frame, AMD was considered a second-rate semiconductor company. It was not something that you were looking at seriously if you were looking at one of the big players in the industry.
Yeah, I mean, there's some good companies on here to study, but again, when I look at it, no, software does kind of erupt a little bit here. Some of the software application, this is almost suggesting, again, keep in mind that this is 5 years ago. The 3-year performance for these companies, some of this software application stuff did latch on, take hold, and continue in the right direction.
Yeah, we bought Paycom last night in the Mid-Michigan Model Club. We added to a position in Paycom. So it's, but we added to that position at a lot lower price than $216. So it's come back an awful lot to become attractive again to a club investor.
All right, so I don't think we need to beat that to death, because I really think that it's, I'm not struggling a little bit. I'm just having a hard time finding the words. You know, you're kind of hoping to see that there was just this obvious area, like invest in infrastructure like crazy, or some other notion, and it just wasn't there. I'm not sure that it's there today, would be my skepticism with the way I would capture it. But Ken and I have always talked about, again, theme investing is something we like to explore and think about and search for opportunities, but we're really not that driven by it. We're actually more driven by, well, let's just go out, do what we always do, find the best companies, and basically the kind of the best player available in the draft, take that best player. So I said, well, forget those two lists, go back and say, well, what were we actually looking at on November 11th, 2016? This is the stock to study list from that time. And you can go back, it's documented, not making it up. These were the companies that had the highest return forecasts and the highest quality ratings back in that time frame. Did they all work out? No. But across the board, they didn't do too badly. So, I mean, I know that I invested in a couple of these back in that time frame. And it's just kind of fascinating to look at this list from top to bottom. I would also add that this was before we grew weary of what seemed to be fairly low reliability from those two columns. So we kind of flushed those for a while, at least put them in the penalty box. So we used to follow
Mark, remind the audience what GS stands for.
Goldman Sachs.
Okay.
So those were the Goldman Sachs selections, or their price targets back in that time frame. You'll see one of the reasons when I hit the advance button why we pay less attention to them now. But good company from top to bottom. I do find it interesting that some of those were pretty ugly on the value line sheets back in that time frame, including this one right here. So
yes, and we need to all make sure we remember that today and tomorrow is Amazon Prime Day in case we need to buy it.
Yeah, we will be covering
now,
that.
is your basket full? Mine is.
I actually do have something in the basket to push the send on. So here's what actually happened. And over the next 1 year, you can see the actual returns on these companies, and then over the next 5 years. And those are basically the averages up at the top there for the market versus what actually happened, the average down at the bottom. And it's just kind of fascinating to me to see that there is some validity to more than some. The method works. And you know, rather than go looking for this theme driven by election results, maybe it just makes more sense to get out there, keep doing what you're doing, and maybe double down if you get some real good buying opportunities. So,
Mark, it's amazing if you go one step further and look at the low ones, how many of those ones that are low are either Chinese or they're banks.
Yeah, you can see a number of these that are just not working out as well. Is Baidu on here? Because Baidu's actually kind of hot right now. It's
Baidu's the one you just
yeah.
marked. And we have three Canadian banks on the list: Bank of Montreal, Royal Bank of Canada, and Toronto Dominion, and they all did pretty poorly over the 5-year period. And then you add to that a couple of the other small ones. You know, we have Ameriprise, which, I'm sorry, that's not what that is. That's Wells Fargo, that was beset with scandal during a lot of these years, and you've pretty well taken care of the really low performers. I'm not quite sure, is Franklin Resources a company equivalent to something like maybe T. Rowe Price or something, Mark?
Yeah, exactly. It's a T. Rowe
Okay.
Price type company, and they
So
have their ups and downs.
yeah, so you take those companies off the list, and you have a really healthy set of companies left to look at here.
And then it's just kind of fascinating that the Goldman Sachs results don't correlate very well, and we've written about that in the past. I don't want to get any explosives in my mailbox, so I won't talk anymore about it. So it's just kind of fascinating to see how these have worked out. When you take a look at some of these returns from those information technology companies that Cy Lynch is infatuated with, and some of the other companies like MasterCard and Visa, and how well they have done. Again, the message that I hear, or at least interpret, and I'm certainly biased, is stop worrying about those themes quite so much and just do what we do every day. Kind of same thing we do every day. Binky. All right. Anything else here, Ken?
I think we've beat that horse to death. Let's move on.
Okay. So let's beat another horse for 8 more minutes.
Okay.
Here's that Seeking Alpha list. I want to do another challenge. So here are the 5 companies that they picked, and again, without any fanfare, I said, all right, they want to pick Carpenter Technology. All right, I like the idea of investing in metal fabrication. Sounds good to me. Basically went to the industrial list on the stock research page and said, well, which one would we pick? Well, I like these 2 numbers better.
Oh boy, am I glad you didn't circle Ampco down at the bottom there, Mark. Okay.
Well, I would only do that in honor of Kevin.
Okay.
Beetlejuice,
But
don't do it.
don't do it. Don't do it. All right, so there. Let's pick Mueller instead of Carpenter. The second one was an energy selection pick. Which one did they pick? Got to go back and look. Western Midstream Partners. Good thesis. There's obviously some things that are probably going to come out of that. I would say no matter who wins the election, some people would disagree with me on that, but we could debate that at some other time. So I said, well, what are the best companies in energy? Again, ranked from the highest quality to the bottom. This is the energy sector, not just the industry. I like those 2 numbers better. We picked this one for Buttonwood last week, so let's stick with Schlumberger. Fair enough, Ken? Or do you prefer anything else?
No, I don't. And if I were sitting in a club meeting right now, there would be 4 or 5 people in at least one of the clubs asking me why I didn't move to EOG Resources. And when I said 17.8 and 19.4 are the same number, and the quality of 99 really trumps the quality of 89, I think that I would have an argument on my hands. So I think there's a couple of relatively logical choices. I think Dorchester Minerals is another one that says to me, you know, pick me, as well as this cactus. But I don't have any problems picking the top one on the list because you have 3 or 4 decent candidates in this industry. We might be ending up with a nice industry study here of 5 or 6 companies, huh?
Absolutely. And in fact, Cactus was covered in a really nice presentation by the Denver chapter of Better Investing not too long ago. And I think I've seen it in a couple different portfolios. Kevin, was one of those yours?
I think certainly Halliburton is no slouch either, Mark.
It's not.
Yeah. So I do always watch the growth number, and I think that that Schlumberger's growth trumps almost every other one in the list there. So you might as well pick one of the faster growing ones with the higher par values attached to them. If you have a number of choices, I think this one's not as clear cut as your Mueller choice, but it's still a great choice, I think.
And we
And
talked
I
about,
haven't looked at. I was going to say I haven't looked at Schlumberger in a while, but aren't they basically a pipeline company, and they're not necessarily moving? They're moving other people's product, isn't that right?
No,
well,
Schlumberger is equipment.
yeah,
Equipment. Okay.
yeah, they're
Yeah.
actually more of a services type company. You'll see you remember the movie with John Wayne, with the fire stoppers?
Which one? He only had like about 150 of them.
Well, with respect to oil rig fires and stuff, remember that's
Okay.
Wildcatter.
Wildcatter, yeah. Well, that's a company like them. They do the valves. The people come in and seal off the high pressure leaks, and they provide all kinds of piping and type stuff that, including the services, some of the chemicals. I work directly with them on some projects to do some cleanup work at utility sites.
Yeah, my thought process on this is I would be looking for something that was either integrated. In other words, they did exploration and production, plus they were in the midstream, where you had the equipment and stuff and pipelines, and then also if they had stuff down at the end. Or I would just go with stuff that was in that midstream where they had a lot of, again, equipment or pipelines, because they tend to be much more stable than any of the others. The exploration and production will really be sort of a real boom and bust. And that would be my argument against EOG, because, and again, it shows up in the earnings stability in the, it really shows up there. But I mean, if you add up all the core, you can see, while they're not spectacular stability and financial strength for Schlumberger, it's still clearly more consistent than just about anything else out there outside of Texas Pacific land.
Yeah, and the other point that we made last week, and I'll just make one last comment on Schlumberger, it is kind of a turnaround situation. They were in the dumps for quite some time, and that is heavily biased by expectations for the next few years. And they're notorious for being disappointing from time to time. So it's definitely an embedded risk. That Valvoline might be even better idea. I know that Berkshire Hathaway has looked at Valvoline and Valvoline type companies.
It's getting really scary, Mark, when you say exactly what I wanted to say, that we put this in Buttonwood last week because it was involved with selling to almost every single company on the list.
Yes.
It sells equipment to everybody in all parts of the oil and gas industry. So that was one of the big selling points for using Schlumberger in the first place. Yeah.
Cool. All right. What was our third company? Again, engineering and construction. What I did here is just went to the stock screen and said I want to look not just for engineering and construction because you won't get enough. I went to the industrial sector, went for companies that had above average return forecasts and excellent quality. There's a number of companies here that have been showing up on a number of lists. It's a good shopping list. There's a Buttonwood holding right there that, at least for now, is a Buttonwood holding. And you could go with a number of these. I think I decided to go with Deere and Maximus ultimately.
And here's a commercial break here, but Veriterra, and then also earlier we showed Gravity. Those would be two of the stocks that we look at in digging into the BI on August 5th. Those were just settled a couple of days ago.
Oh, cool.
So I'm intrigued to take a look at them. And Ritchie Brothers, Ken Williams, who's in the audience, he's looked at that several times, and our club has owned it several times. An industrial auctioneer out of Canada.
Yeah,
I've really been happy with that one over the years.
Heavy equipment rental and auctioning. Good stuff. All right. So then, last but not
Mark,
go ahead.
How about the news that Deere is moving manufacturing out of the country? Is that going to cause you any problems in your thinking? Laying off a lot of people in the Midwest and moving manufacturing out of the country?
Yeah, and I can directly relate to that. Yeah, it hurts. Deere is a great, long-standing Illinois company, and there's a lot of allegiance there. We shall see.
Okay. I don't have any problems with Maximus. I have a little bit of bias about Deere at the moment. So, but
I might
let's
throw
put
them
it
up.
on.
I might throw them off the list and explain at a later date why I would do that.
All right.
All right, and then for another example, Wells Fargo was one of the companies, and I said, well, let's not necessarily look at Wells Fargo, but when you go into the manifesting research page, you can actually click on, it actually gives you an automatic top 20 or 40 companies to look at based on their return forecast and their quality. You can further filter that down to just industry, and in this case, I took a look at just I can't remember what I looked at now. Just financials. Just financials. And Ken, this probably lines up with some of your insurance company thoughts. Here's one of those
Absolutely. It's
diversified
one of the
companies right
reasons,
there.
one of the reasons why we're going to be studying insurance. I know which one I'd pick off the list. I'm waiting to see which one you're picking. So,
well, I threw in the towel and just went with Visa.
That's what I would pick as well.
Oh,
yep.
Geez. We've been hanging out too much.
And Ken, do you want to reconsider?
No.
Not too late. And then last but not least, there's an aerospace and defense company there, L3 Harris Technologies. So again, you can just go over here and decide, well, do you like any one of these better? And Vertra's there, ESLT. And then if you look down in industrials, you see some of those companies that were just up on our screens. There's 4 of them right there if I throw TREX into the mix. So again, we're looking to find 5 replacements to that Seeking Alpha list. So here are the ones that I went with, and I may fire Deere based on Ken's comment. But what I'm going to propose is we go head to head with Seeking Alpha with the companies at the bottom, basically using the same rationale to get to them. And those 6 companies, I was going to put half in Deere and half in TREX for a fifth, half position, and basically do a head to head here. Any thoughts or comments?
I think it's an interesting list, and we're not. It's fun to play with imaginary money sometimes. So let's play and see what happens. Yep.
The only one that bothers me a little bit is this guy right here, but and this one right here. But it's probably time to roll this to 25-20 versus 24 pretty soon too.
Well, that Deere sales number is a little bit troubling too. That -14, but
it is. I was trying to close my eye and not see that.
Okay.
You're using little bit in air quotes.
Yes.
I mean, that's more than a little bit.
Yeah, it's known as a flat spot, the long-term trend.
All right.
Maybe worse than a flat spot. Who knows? We'll see. So there, we'll go with those 6, maybe 5. I'll decide later, and we'll go head to head with these guys. And I like our odds when you look at these numbers here versus the ones below. And in fact, our RSIs are pretty much better, and it's just kind of
those proof numbers are significantly better. Look at those proof numbers; those are so much better.
I love that aspect of it. Very cool. All right. So with that, here is
Mark. I think somebody just needs to say
thank you. Wish us luck. Here is the Buttonwood portfolio. I'm not going to spend any time other than say many of the companies we've just been talking about are part of it. We will probably wait to do our challenge to Vertra till we hear what Kevin has to say about it at their.
I'm not doing it.
Webcast.
Actually, one of the directors in the Maryland chapter, Cynthia Williams, is doing it.
Well, it's your group.
Yeah.
Mark, the one I thought we were going to put at the top of the list, the challenge, was Thermo Fisher.
We are.
Okay.
It'll get there because this is one of the lowest numbers on the list in combination with that one. So
well, the sales growth is the one that, I'm not as worried about the par number as I am about the sales growth number. Yeah.
And we do want to try to avoid being too hyperactive with this also. So we'll see.
Absolutely. But I'm just wondering if, we did add a number of these just kind of on a lick and a promise. We didn't do a whole lot of digging into some of these. So it's time to play
to
for
manage.
real and see what happens. Yeah, time to manage.
This one's kind of fun. That's one of our play stocks. It's up considerably here in the last few days. That's Matt's radar company, Laser. All right, here's our inspiration.
The one without earnings, right?
Yes. Here's our
Yeah, well,
inspiration for
my play stock is went over $10 today so far.
which one?
LILA,
Oh, Lila's up again.
$10.04.
Well, you're already doing very well on the ground in the round table standing, so that's not going to hurt you. All right, here's our inspiration for talking about the electrification portfolio either next week or the week after. And again, that's going to be the data center need for electrical power in combination with some of the stuff that Ken was talking about, power generation alternatives. And this is actually a slide from our July, I think it was 2020. That sound right, Ken? Can it really be 4 years ago?
Yes, it probably could, because it was during the initial phases of the pandemic, and yeah.
Because I mean, this is just some of the stuff that I came away with from that very thought-provoking book by George Gilder, the futurist. And these companies, Amazon and a variety of others, Google, have been out there and very strategically locating facilities and renovating and restoring some power generation sites, and with an eye to the future. And they saw this coming, what we're about to go through, and some interesting quotes there. This is obviously a very smart gentleman.
Mark, this has nothing to do with life after Google, but Patricia out in the audience is suggesting that you take a note and look at Deere and how the right to repair bill might affect Deere's revenue.
Okay.
Okay,
right to repair.
And Patricia, I'm completely in the dark about what the right to repair bill is, but Mark has captured it, and so we'll take a look at what it is, okay?
Cool.
And then we're getting a number of people in the audience telling us that VTSI earnings are coming out in early August. Ty tells us on August 12th, okay?
Yeah, and I do think that with some of the stuff that's going on, that companies that are in their line of work are probably favorably affected. Here's your weekly reminder that we do archive these presentations and the roundtables on YouTube under the Manifest Investing channel. If you have trouble finding that, let either Ken or myself know. We'll help you out with that. If you do subscribe, we will let you know anytime that new content is added. Okay, and Kim, there's your celebration of Prime Day. Thanks for the reminder. And then our picture this week comes courtesy of world traveler Matt Spielman. And that is his view, and his lunch being stolen by the so good stuff. We just hope he travels safely and returns to a house with electricity here in the next few days. So with that, a couple slides there for those of you that are new and need to take a closer look at Manifest, but you can grab those in the slides. Anything else at this point, sir?
Nothing. Patricia, Mark has clarified what this bill is, and it's the right to fix your own equipment rather than the requirement that you must pay Deere or a like company to fix your stuff. It's being championed by Senator Tester, who's also a farmer.
In fact, I now that nudges me into recalling, I did see where there are a couple of very innovative young farmers out west that figured out how to do a bunch of almost AI type stuff with their tractors. And it was really simple, almost like machine controlled, numerical controlled machines. And they were told they can't do that. They had to go through the major providers for that. And then that, I'm sorry, but that's not America. And that's all I'm going to say about that. That's just wrong. So Tester's probably defending that. It's probably got some fairly wide-reaching impacts. I mean, defending that on behalf of the innovative people.
Yeah, I understood what you had to say.
And that's probably Kim's workers in the background being innovative with her air conditioner.
Yeah.
So at this point then, we're ready to say good afternoon to everybody, and remind you that we're here every Tuesday at 2 o'clock with another bull session, and remind you that our date this month for the roundtable will be the normal date of July 30th. We start that roundtable at 7:30 in the evening. If you're not already on the Mid-Michigan guest list and would like to be added, drop me an email and I'll send you a set of instructions which makes it simple as 1, 2, 3 to get yourself onto the email list. And
we do kick the doors open. We generally open the doors a few minutes early, but I think it's still 8 o'clock Eastern time, Ken.
8 o'clock. What did I say?
7:30.
Oh, that was just wishful thinking. Okay.
I would like to do that too, but our West Coast people would have a hard time with it.
They really want it. It's 8 o'clock. You're right. Although Mark's right, we do try to start around 7:30, 7:40 with chatting to our audience. So come early if you have questions or comments. And that program's been going for a long, long time, and we have a great deal of enjoyment coming from it, and we hope you do as well.
All right, so with that, we'll sign off. Just keep doing what you're doing. Get out there, find excellent companies on sale, and accumulate them and hold them for as long as it makes sense to do so.
And folks, if you have companies involved with these modular reactors or with uranium mining or anything that you find interesting, please send me the ticker and I'll add it to the list that I'm developing that we're going to present in an upcoming roundtable. I don't promise it for next round. I'm sorry, an upcoming bull session. I don't promise it for next week, but we'll have one as soon as we can. Okay?
Thanks, everybody. Be careful out there. Stay cool.
Mark, can you stick around for just a moment?
I will do that. Let me go ahead and stop the recording.